Shock and chaos. Across Indonesia, protests have turned violent. The finance minister's house has been looted, government buildings torched, and even police stations attacked. What started as public outrage over perks for elites amid economic hardship has spiraled into an explosive collapse of order. Why this matters globally? This isn't just local unrest. Indonesia is Southeast Asia's largest economy. Any disruption there sends ripple effects across global markets. When political instability erupts, investor confidence retreats, and global capital reallocates fast. Rupiah and stock market reaction. The Indonesian rupiah immediately weakened, dropping nearly 1% against the dollar, while Jakarta stocks fell over 2%. These moves reflect how sensitive markets are to political breakdown. What weakening rupiah means? A weaker rupiah immediately pushes up inflation, increases debt burden in USD, and pressures Indonesia's central bank to spend reserves or raise rates, risking economic slowdown. Central bank steps in. Bank Indonesia has announced currency interventions in both local and offshore markets, plus bond purchases to stabilize the situation. These are textbook moves to restore confidence. Global supply chain concerns. Unrest could disrupt commodity production, especially nickel. Indonesia is the world's top producer. Even short-term interruptions could impact global EV battery chains or metals markets. Investment impact outside Indonesia. International investors writing emerging market ETFs, sovereign bonds, or even raw material ETFs. Behind every risk asset lies a sentiment shift triggered by events like this. Risk management tactics. For U.S. viewers with exposure to EM assets, diversify away from short-term Indonesia risk. Monitor USD IDR and intervention signals from BI. Reduce volatility by favoring USD-denominated EM debt during instability. Potential recovery path. If protests de-escalate and policymakers respond credibly, restoring law, rescinding unpopular perks, and stabilizing liquidity, markets may bounce back quickly. Indonesia remains structurally strong. Chaos in Indonesia reminds us political instability rapidly shakes markets, but smart investors stay informed, act decisively, and see through the storm. In global finance, awareness equals advantage.